Hey, do you want to know how to run your retirement race successfully and get all the way to the finish line? Stick around and I'll tell you how. On August 13th, 1908, the first modern Olympic marathon ended in dramatic fashion. The marathon at the London Olympics became one of the most famous and chaotic races in history. The race's now standard distance, 26 miles, 385 yards, was set for the first time to allow the royal family a front row view of the finish at White City Stadium. Now that day, Italian runner Dorando Pietri entered the stadium first, absolutely delirious from exhaustion. He collapsed 5 times, ran the wrong direction, and was finally helped across the finish line by officials, only to be disqualified for receiving assistance. The drama transfixed the world, and Pietri became a symbol of courage, heartbreak, and the fine line between triumph and disaster. The 1908 marathon proved that victory can be both hard-earned and fleeting, that rules and support matter as much as raw effort, and that enduring legacies may be forged by how we respond to setbacks instead of just how we finish. The marathon, from its ancient roots to the modern games, reminds us that success requires pace, resilience, and sometimes the humility to adjust mid-stride when the course conditions demand it. Here then are 4 lessons for the modern investor from Pietri's problems. First of all, pace yourself for the long game. Yet the marathon is not a sprint. Dorando Pietri's collapse teaches us that pushing too hard, chasing hot markets, betting big on flashy trades, or stretching for outsized short-term returns, well, that can leave you vulnerable to burnout or loss later on. Setting a sustainable pace, diversifying your approach, and planning for the long haul drives more consistent outcomes. Periodic rebalancing, steady contributions, and rational withdrawal strategies, they all win over emotional bursts of energy. Second, we learn that rules and structure matter, so don't ignore the fine print. Pietri's assistance at the finish, though well-intentioned, well, it violated the rules, and it cost him the finish. For investors, ignoring tax rules, account structures, withdrawal requirements, or policy changes can turn a near win into disappointment. Make sure your financial strategy is not only sound in substance, but also respects the rules of the game, whether that's minimum distributions, contribution limits, or new regulatory realities and tax rules. Third up, resourcefulness under pressure. That's what made Pietri's run unforgettable. Not just his stamina, but his refusal to quit after each setback. He found ways to pick himself up, regroup, and press on creatively, even when physically depleted and disoriented. For us investors, success is rarely a matter of stubbornly sticking to plan A. More often, it's about sizing up the obstacles, using what's left in your toolkit, and making strategic, sometimes inventive, choices on the fly. Now, whether that's turning to a different asset class or tapping a cash reserve, or even rethinking your goals when conditions shift, the road won't always be straight. But resourcefulness, well, that often makes the difference between giving up and crossing the finish line. This episode of the History Lessons podcast is sponsored by Victory Independent Planning. Hey, are you ready to take the stress out of your retirement? At Victory Independent Planning, we put you on the right trajectory with our exclusive VIP retirement glide path. Our smart approach prepares you for what's next by optimizing your sources of savings and income, your medical and healthcare planning, your advanced estate and giving strategies, risk management and investing, and tax planning. Let us help you glide into retirement with confidence. Text GlidePath to 239-567-5477. That's GlidePath, all one word, small letter G, to 239-567-5477 and receive a link to schedule a complimentary consultation. Do it today to start your journey on the VIP Retirement Glide Path, because your future deserves a safe landing. And finally, the power and pitfalls of recency bias. Pietri's heroic, if painful finish imprinted itself on memory, sometimes overshadowing the steady run of the actual gold medalist, Johnny Hayes. Investors too often let the most dramatic recent events, a crash, a meme stock rally, a runaway bull, loom larger than years of progress. Recency bias can lead to chasing trends, excessive fear, or hesitation to invest after a loss. Instead, keep the bigger picture in focus, the long arc of steady progress, not just all the drama at the finish line. Here's a final thought. The 1908 Olympic Marathon is remembered not just for crowning a champion, but for reminding the world that grace under pressure and practical resourcefulness, those define your real legacy. It's not the stumble or the unexpected twist that settles your fate, but how you pace, how you prepare, and how you problem solve when the course gets rough.